subsequently, in fact, it became much larger because credit expansion was well in excess of that over a period of several years. So what do you think is the reason why there is less effort by the government to revive the economy this time? I'm not going to provide the answer, but I'm going to listen to what you have to say. You can also be of the view that the government is doing as much as it can by way of credit easing, interest rate cuts, some increase in expenditure on infrastructure. And I've mentioned to you that, there's been a restart of real estate activity, investment in energy production, energy generating infrastructure, and all of that. But do you think it is enough? And why is it not as aggressive as was the case last time? Because this time the shock is much greater, far greater than was the case in 2008, 2009.
Yes. I think there should probably be more done on the fiscal side, but I guess you could make the argument that they just have less fiscal space than they did in 2008. I mean, they're already running a relatively large fiscal deficit domestically. So, right. And with debt issuance, there's just, I guess, a little bit less room than they had the last time around. I still think they should do more, but I guess the sort of counter argument to that would be the fiscal space issue.
Okay, so they're running a current fiscal deficit last year of 4.9. It will certainly be higher this year, in part also because tax revenues will diminish as this activity going down. So, right, so there is less fiscal space, but nevertheless, relative to most other governments, China has more fiscal space, and the public debt, at least the central government debt, is much lower than, for example, in some of the other European countries and now in the United States. Okay, any other thoughts? Tal, you had your hand up.
Yeah, I was going to say what Chris just said.
Okay.
In addition to that, perhaps I think the general consensus is that Chinese government's reaction back in 2008 was perhaps a little bit too much or a lot too much. So there was an overreaction, and perhaps this time it doesn't have to be that way. And also I think the Chinese government is thinking that perhaps it's not going to be as effective as in 2008. So let's wait and see. They're going to have the two big meetings at the late May. So I think maybe they'll step up a little bit. But I think for now, they just sort of wait and see. And of course, for this time affected Europe and the United States. So there's no export market. And so they have to sort of rely more on the domestic market. So it's really a combination of 3 or 4 different reasons.
Okay, all right. So maybe, as you said, they are still waiting. When it comes to external markets, there's a sort of feedback effect here. If China doesn't sort of resume activity, other countries are not going to be export to China and so on. And therefore, that feedback effect means that they can't demand imports from China and so on. One factor, okay, but let me stop there. What do others have to say?
Well, I was going to say something similar, which is that maybe they're sort of looking around at the rest of the world and seeing, they may, I guess, predict that this is not going to be, the V-shaped, what I think V or U or really shaped sort of crisis. So, maybe I would think, what's the value of putting in all of the effort now if you look around and say like, okay, we think this is going to go on for a while. But then I would think maybe they should be doing sort of, I guess I don't know what the difference would be between sort of planning for like a longer term, slower economic recovery versus just trying to get back immediately to what it was before. But that's what I was sort of thinking.
Okay, if you look at what the rest of the world is doing this time around, at least the advanced countries and even some of the developing countries are doing far more than they did and far more quickly than they did, in part because the shock has been much more severe and the downturn in most of these countries has been much greater. The disadvantage, I would say, of waiting it out is that more and more of your firms suffer or go under. And the longer this lasts, the more likely it is that not only do your firms suffer, but then there's the effect on banks as well through bankruptcies, non-performing loans, and so on. So it would appear that a wait and see attitude, given the severity of this thing, would seem to be counterproductive, though you can argue both ways. What else? Any other thoughts there? Yeah, can you?
Yeah, Professor. So I haven't checked this area, but I feel like there may be ongoing debate within like senior advisors or like policymakers in Beijing about whether they should go further or like just be more cautious in terms of like using fiscal tools, because like since 2017 to 2018 there have been this reform about deleverage, about better allocation of resources, and I think it's rational for policymakers to be more cautious in terms of the role of government in promoting like economies. Yeah.
Okay, Ben, yes.
Following up on that, shall we expect any major policy to be announced? I think this year to be next month, May the 22nd, during the NPC meetings this year.
Okay. So again, both of you are saying that they are being more cautious this time around because of bad experience last time, and also because of the delay in the senior leaders getting together. Okay? So, I mean, these could be. Now, if I were to ask you, how would, looking back in time, would the Chinese leadership be of the view that what they did by way of stimulus in 2008 was actually not as effective, or at least caused greater harm than they had anticipated? Is that the way you think they are reading the tea leaves from the past? Which would explain their caution and delay in coming to some kind of a judgment on policy.
I think the 2008, 2009 reaction was generally positive, and it worked for the most part, but it was probably overreactions, and there was some downside to it because there was a tremendous increase of debt. So it's a really, this time, just not, I guess they're not sure they want to do the same or just do as much. That's my view of it.
Okay. Others? Ben, yes?
Similarly, in graph, there's a rise in ICOR, especially I think in 08 or 09, pretty much follow the 4 trillion stimulus package. So does that signal a negative or overreaction to the crisis or not?
Emily, you had?
Oh, yeah, I was going to say also they might also be concerned about a secondary outbreak, and if they were to stimulate the economy now and then have everyone have to go back down into lockdown, whether that would all be for nothing, and then they would have fewer tools at their disposal after having already used them a first time.
Okay, with regard to what Ben said, I mean, certainly what we see is that investment in China is running into diminishing returns, which sort of explains the rising ICOR, and that in the argument could be made that the spending spree which erupted after 2008 contributed to this excess investment and is responsible in part for decline in returns on investment. And what you said, Emily, yes, it's quite possible that there is a fear that there will be a second wave in the fall or in the winter, and that because of the second wave, perhaps they should wait and see. But remember, if you sort of wait till the second wave hits, and if the second wave doesn't hit, then you will have, a lot more bankrupt enterprises on your hands as well. So one has to sort of weigh that in deciding whether to delay any sort of action. Remember also that the last spending spree led to the massive expansion of the shadow banking system. And so you could again make the case that that was perhaps unavoidable and not necessarily a bad thing, or you could say it was in fact unfortunate outcome of excessive expansion of credit. Any other thoughts? Jackie, anyone else? Yes, Ben?
I think I might have missed it if someone had said it, but just in case it hasn't been, I think a big reason is just that kind of post 2008, one of the big things that spending went into was in infrastructure. And so now they're dealing with the problem that obviously they can't kind of put as much into that. It's already at overcapacity in a lot of situations. So it's kind of a different outlet that they have to look for.
Right. So one could say that for the time being, the infrastructure possibilities have been pretty much saturated, that there is so much excess capacity out there that it really makes no sense. And therefore the question is, what other things could be done? How do you see this affecting BRI? So, I mean, there's two things here. One is what sorts of, how ambitious China is likely to be in that regard, and how much FDI do you see arising? I mean, what sort of trend in FDI do you expect to see in the near term?
I mean, I guess for me, I would actually still probably expect to see a kind of BRI continuing, because in a lot of ways, one of the reasons for BRI was to channel kind of the excess capacity of infrastructure. And so it seems to me like that would make logical sense to continue doing that and to continue to try and seek new markets, but probably in the very short term, obviously not, because they have to focus on kind of domestic problems first.
Okay, but now look at it from the point of view of the countries receiving Chinese FDI. How are they likely to be affected, and how is their situation likely to affect lending by China? So, what do you think?
So I do see that right now Chinese SOE is doing this like overseas contraction or investment are caring more about like sustainability and local employment, or inclusion of like local subcontractors. So that may be a positive benefit that can bring to local economy by like boosting their supply chain, or just provide more job opportunities. So there may be this matching interest in between Chinese sectors and local countries. And in terms of lending, I mean, it also depends on what will be the mindset of like the policy banks in whether it's possible to renegotiate some terms to provide some like extension of payments, or just to ease some standards. And I think for that side, it really need to say what would be the statement from Beijing senior leadership in the coming months, I think.
Okay, you do know that many of these developing countries are now asking for some rescheduling of their debts. They are, many of them now are asking for a moratorium on payments, or at least for a year. The G20 has met, and the G20 has already agreed on a standstill for repayments for 1 year. And clearly a lot of countries are now hurting, and may be hurting even more in the future. So there's two sides to it. Whereas from the Chinese side, there may be some advantage in continuing FDI because it sort of mops up excess capacity in domestic industry. But from the other side, countries may now feel that their export prospects look pretty bleak. If some of them are exporters of raw materials, whether it's oil, copper, or anything, they may feel that prices are going to be low, so earnings are going to be bad, and therefore they'll have a harder time servicing any loans from China. So there's that. In addition, if growth is going to be lower, you're also going to be needing less infrastructure, remember. So you have to think about it also in terms of what would be the return on this infrastructure investment if you put it in. any other thoughts? Zijin, others?
Yeah, so I just want to build on what Emily just said. I think like China's concern about a second wave is not only about the economy in an abstract way, but also in a like real term. Because if you stimulus have the stimulus package to the economy, like that needs like a lot of like the real people interactions, like the real investment, the real commercial activities. I think that might also like in a way will cause the like spread of the virus. I think in some way, I feel like the economic activities will only recover after like in a real way, only after the vaccines are like effective and useful. Yeah.
Okay, that's quite possible. That may be one reason for perhaps waiting. Something which you should also keep in mind is that China stands to benefit from lower oil prices and lower prices of all major commodities. For instance, copper, iron ore, all of these. So that way it affects its trade balance. And in fact, it runs more of a trade surplus over the near term. Secondly, recall one of the large services deficits was because of large numbers of Chinese tourists going abroad and spending. Now, if you're going to have fewer of those tourists going abroad, there is less of a deficit possibly on the services account. But at the same time, fewer people are going to be coming to China as tourists. So the net balance may go one way or the other, but my sense is it will probably go in China's favor in terms of Chinese tourists going abroad and so on. One other thing, and I leave a number with you, which is that if you look at the assets of the banking system of China in 2008, the assets were roughly about 64.2 trillion renminbi. So the total assets of the banking system were about that much. In the meantime, since then, they have now risen to 292.5 trillion renminbi. So there's been a quadrupling of the assets of the banking system in this intervening period. And if you sort of translate that into dollars, it amounts to nearly half the GDP, global GDP. So what has happened, which is a big change and really important to think about it, is that the balance sheets of these banks have swelled to such huge proportions that it's no longer really feasible to expand credit at the rate they did, way back 10 years ago. You just can't do it. The balance sheet is just too enormous now. And the space, as with fiscal space, also with credit space, the space to grow has diminished. So these are, there are all of these factors that hinder any stimulus along the lines of the ones in the past. We've mentioned quite a few of them. I should also say that if you look at the recent past, and I think we did talk about it, the Chinese lending for BRI has been tapering. And it's been tapering because of, mixed experience, some resistance and pushback from countries, increasing evidence that returns on some of these investments were low, concerns about debt rescheduling and so forth. All of these things were kind of slowing the process down. And I would say that, the China Development Bank, the China Exim Bank, the two biggest lenders, probably approaching the limits of what they can extend to state-owned enterprises to go out and invest in things. I told you I'm working on Cambodia these days, and so there's a lot of interest there on what's going to happen to Chinese FDI, whether it'll continue to come there or not, because they really have been heavily dependent on them. They run a huge current account deficit, 12 to 19% of GDP. And the only way to close this enormous current account deficit is one, remittances, and two, foreign direct investment. If that doesn't come in, the economy has to, I don't know, shrink or not grow as much. And already thousands and thousands of immigrants who had gone to work in Thailand and Vietnam and elsewhere coming back. So, and this is, in a microcosm, it is a problem which many countries are facing. For instance, I work on Ethiopia and Kenya, and many of the workers who work in the agricultural sector or in industry in urban areas, all going back to their villages. And the concern is that once the economies restart, will these people all come back? And will they come back to the same companies, or will it be, will all these companies have to go through a new process of trying to recruit workers and to train them? And that's a non-trivial expenditure. Even when it comes to things like garment workers, it takes a while for people to get used to working with industrial sewing machines. And secondly, if you're working on a specialized activity such as horticulture, training a worker can take up to 6 months. So all of these concerns out there for countries that are, unlike China, much more vulnerable, have much lower incomes, and are much more dependent on a very limited number of activities. All right, next, I think the next couple of weeks, keep an eye on what's happening in China in terms of trends, developments, because I think it'd be useful from the point of view of exams and so forth. It'd be good to be able to draw on this information for your answers. Okay, I have some things I'd like to discuss today, but I also want to go over very briefly some of the highlights of all of the things that we have covered so far, just very, very quickly. And maybe I can do it right now and then move on to talk about some of the other things. So if you recall, we started out with the East Asian model, and we kind of talked about the main features of this model. And the main features of this model was, which China really embraced after 1979, was that it was both investment and export led. It depended on very high rates of savings mobilization, mainly by the banking system. It depended to a considerable extent on financial repression, which meant that returns to depositors were sort of held down, and this made it possible to extend credit to the industrial sector and to other productive sectors at very low rates. So financial repression was important. Mobilization of savings by the banking system was important. These countries were very banking sector dependent. Also, they pursued industrial policy with industrial targeting. Services were slow to evolve because the focus initially was on manufacturing. And all of these countries were greatly helped by the growth of the global economy, and in particular, very rapid growth of global trade. So remember, during that period of time, trade, particularly of manufacturers, was growing at 7 to 8% per annum in volume terms, and that made it possible for these countries to benefit from it. Very importantly, they had closed capital accounts, and they pegged their exchange rates at depreciated levels to the dollar. So it was active exchange rate policy to maintain a favorable exchange rate, industrial policy, and banking policy. So sort of keep these various things in mind when you think. Started off with Japan, followed by the Four Tigers, followed by China, and then subsequently extending to the Southeast Asian countries. And this whole region has developed into a vast, interconnected trading bloc with many, many different interconnections through supply chains of important products. China has perhaps been a leader in this regard, has become the sort of industrial hub for this region, the most important trading partner for almost all of these countries, almost all, I would say, and an important driver of their growth. Whether it will continue to be the driver, unclear, but it has been the driver. And one by one, all of these countries, to greater or lesser extent, have followed this kind of an East Asian model, some more successfully than others. So we started with that. Then we looked at the contribution of banking and finance to development. We noted that it supports growth and industrialization. If you look back into the 19th century and early 20th century, the growth of many of the European economies was made possible by these very large universal banks that were able to mobilize large volumes of resources, and you needed this large volume in order to be able to set up industries of the scale needed and to build infrastructure and so forth. As countries evolve, it was advantageous, it seems, to move away from totally banking-centered financial systems to financial systems which were much broader and covered many different areas, stock markets, investment banks, and so on. The reason was that it provided both savers and investors with many different opportunities to both mobilize savings, invest them more efficiently through different channels, and so on. And so you find that all advanced countries moved from this banking-centric system to a much more diversified one. And on balance, if you look at the people writing in this area, finance supports development. Causality has been uncertain, whether it's the development of the banking and finance system that drives growth, or it is growth that is then pulls up or leads to the development of a much more sophisticated, broad-based, and diversified financial system. We talked at some length about the evolution of the banking system in China, starting from the 19th century and earlier and coming into the present. We talked about the creation of the People's Bank, specialized banks, followed by joint stock banks, if you recall, private banks, which have emerged since about 2003, city commercial banks, urban credit cooperative, rural credit cooperatives, and so on. Remember, we talked at some length about township and village enterprises and how these were very important for China's growth, at least during the 1980s. The question there was whether the banking system was critical to the development of these activities. And my view was that actually banking and the rural credit cooperatives supported this, but didn't necessarily ignite this whole development process of township and village enterprises and others. We talked later on about the East Asian crisis. I guess, and I'll quickly say that it was because of a variety of factors, and this included, in no particular order, over-leveraging of banks and companies, excessive credit expansion, the original sin, open capital account, hot money, various kinds of asset bubbles, too little bank supervision, weak central banks, too few reserves, and most importantly, pegged exchange rates and open capital accounts. Please remember all of those, that those were amongst the factors that once the crisis erupted, the open capital account and the pegged exchange rates created a major issue for these countries. There were various lessons learned by China, by others, which were applied to in various ways. Countries set up swap agreements amongst themselves for the future. From there, we went to the financial crisis, where it erupted in the United States, in part because of, again, excessive credit expansion, securitization, the emergence of a variety of complex instruments. We talked about how China had dodged the bullet, and we talked about its stimulus program. Again, the lessons that were learned, which have been applied to varying degrees. Do remember the various lessons that came out of this financial crisis, and the extent to which countries have been actually able to put these into effect. We talked about shadow banking, and I won't go over that, but there was this whole question of whether shadow banking was a good thing or a bad thing, or something that was inevitable as a country developed its financial system. My sense was that it is almost inevitable and probably a good thing, as long as it's carefully supervised and regulated. And China has been doing its fair share of such regulation. We talked about the internationalization of the RMB, and you should think also about how this, what happens to BRI in the future, and what happens following this post-COVID developments, which could be some deglobalization. So just think about it. If BRI sort of begins to peter out or slows down substantially over time, which means less FDI by China and so on. And if we do go in for some amount of decoupling between China and other countries, and some amount of deglobalization, with countries becoming much more nationalistic in their development activities, how would that affect the use of the renminbi? It would also affect the use of the dollar, but how would it also affect internationalization of the renminbi? And it may or may not, but this is something to think about. We talked about the BRI and the various investment banks that China has created, and their contribution to development. BRI, as we said, was an incredibly ambitious program. It has certainly contributed to the development of infrastructure in many of these countries. The question is, what is the payback, and how far in the future is this payback going to be? I mean, for instance, I've just been refereeing a paper on how China has very actively set up science and technology infrastructure in many of the countries along the BRI. It has in fact spent hundreds of millions of dollars setting these up. It has brought tens of thousands of students from these countries to China to be trained in the sciences. Many of them have gone back. It has set up, agencies and so forth to deal in these various countries. The question is, what has been the payback, and how far in the future is this payback going to be? Okay, then we talked about banking regulation, and I talked about the structure of the regulatory system in China, starting with the State Council, NDRC, MOF, and all that. What I never mentioned very much was SAFE. So you should keep in mind that SAFE is responsible for exchange rate and reserve management in China, and is a reasonably important agency. So just keep that in mind. We talked about AMCs, asset management corporations, the role they have played, and how they have morphed into banking institutions in their own right over time, rather than being wound up, as has been the case in other countries. And lastly, last week, we talked about fintech and the development of this financial innovations and use of the internet to facilitate financial transactions. Okay, this provides you with a 10-minute overview of everything that we have done. Any questions? Anything that, of all that we've covered, that you have still some questions, doubts about? Something that you didn't quite follow or which you would like to pursue in more detail? So everybody understood everything. Yes, Ben.
Would you slightly elaborate more on the AMCs and I thought we covered mostly about the WIMP in the shadow banking part, wasn't it?
The AMCs, you recall, when after the failure of GITIC and the need arose to recapitalize the major banks, not only did the PBOC and the Ministry of Finance inject capital into the banks in order to bring their capital adequacy ratios up to what was considered desirable levels, but in addition, the AMCs took on board a large chunk of their non-performing assets and paid for them by issuing these bonds, which it was supposed to service. So the bonds provided the capital base of these banks. The non-performing assets were taken on board by the AMCs, which then gradually sold them off at, whatever, 20 cents to the dollar or less or more over a period of time. And much later, instead of being wound up, as was the case in other countries where such asset management corporations were set up, these have been allowed to exist and in fact have become kind of banking institutions as well. Okay. All right. So with that, let's kind of move on to talk about today, what we're going to discuss. And let me start with cryptocurrencies. So does everybody know something about them or a lot about them? Okay, so, cryptocurrencies are, look, we have all been using digital currencies for a long time. Whenever you use a credit card, it's not that you actually physically transfer money. It's actually little digits in some ledger, in some company somewhere. Little digits move from account A, your account, into account B through some clearinghouse system. Your bank balance is not stacks of money in some vault somewhere. It's entries in a ledger. So for a long time, we've been using these essentially digital currencies, but without actually acknowledging that we had entered into a digital realm. But now what is happening is we are talking about cryptocurrencies, and the cryptocurrency aspect is that it's something which is encoded using a complex set of algorithms and protocols, particularly through blockchain. So is everybody somewhat familiar with blockchains and cryptocurrencies? No, yes. How many are quite familiar? I mean, you've all used them. I imagine you all have. Has everybody invested in a cryptocurrency? No one has. Really? You have. Zidin, you have?
I have, yeah.
Which one did you buy?
Bitcoin.
Oh, okay. Let me just mention that Bitcoin, I was looking at Bitcoin's valuation today, and the thing fluctuates like crazy. So what did I see? Let me see. I looked at it in the morning. Wait. Let me get to. Yeah. All right. So at 2:15 a.m. this morning, it was valued at $9,411. At 12:14 this afternoon, it has valued at $8,794. So one of the interesting things here is how much these cryptocurrencies fluctuate. At one time, at its peak, Bitcoin was 19,800. I hope you sold at that time, Zijin. But since then, it dropped as low as, I don't know, $5,000 or $6,000. So one of the interesting things is the huge fluctuation. Okay, let's talk a little bit about these cryptocurrencies.
Can I add a comment? So I look at the trend of Bitcoin for a while, and I think right now the investors may perceive that as a alternative of conservative currency, like conservative assets. Like when US dollar goes down, the Bitcoin would go up, and at the same time the gold will go up as well. Like this is a trend during the trade war, but now I'm not looking at them anymore. So yeah, don't have money to buy them.
Yeah, I mean, one of the main reasons why these cryptocurrencies were attractive is because of a decline of trust in normal fiat currency issued by government, and so people have turned to these for as an alternative. But the purpose of a currency is, one, store of value. It shouldn't fluctuate enormously, otherwise it's not a good store of value. It's a unit of account. It is a unit in which the things you want are actually valued. 3, it's a means of trading. So it's a way in which you can exchange things. Unit of account, means of trading, store of value. Question then becomes whether cryptocurrencies serve that purpose. Okay. You all know about Nakamoto. So, Katerina, yeah.
Well, I was just going to add, there are cryptocurrencies that are pegged to the US dollar, for example, although that sort of, it begs the question, what's the point? To some extent, but that's also out there in terms of the world of cryptocurrency.
Sure. There are a lot of stable coins, and Libra would be another stable coin. And the idea is that stable coins are reliably pegged to the dollar or to other stores of value that maintain a stable value. But again, to me, I'm still haven't put my head around why would anybody invest in those when you could have put your money in dollars. So again, the question of trust enters. It is, if you really distrust the dollar, then you might put your money in a stable coin. But if that stable coin itself is stable only because it's linked to the dollar or gold or others, then it's a kind of circularity here. You come back to asking the question, why invest in a stable coin at all? Okay. I'm not going to go into how blockchain works. That there are permissioned and permissionless ones. Permissionless ones means that anybody can enter, any computer can take part in it. The whole advantage of a permissionless blockchain is that there is no trusted intermediary. All entries have to be validated by every computer, every participant in the system. Before a block can be formed, the so-called miners have to go through a sort of a proof of work process. Look, there's a lot of jargon in this. And there is a couple of interesting books, so very simple ones, which will take you through the process of how you go through a hash and so on. I've written on this, so I've gotten fairly deeply into it, but there's an immense amount of jargon, and it's very quickly forgotten. But I think what needs to be remembered is that in a permissionless system, anybody can enter, so there can be many, many people participating. The whole point here is that you have a complicated system by which blocks are formed. These blocks are time stamped and so supposedly tamper-proof, so that nobody can alter them without altering every hash of every transaction preceding this. So the attractions of a Bitcoin, which is dependent upon a blockchain type of system, is it's sorry, would you? Okay, let me see. What do you? Oh, okay. Yeah, so Ben is suggesting that there is an overview in Investopedia. So maybe if you'd circulate it to everybody. I have a reference also, which I'll send out to you, which is also provides a very simple introduction to blockchain and cryptocurrency. But let me just finish. So it's one is you don't have to have a trusted intermediary. You don't have to depend on a bank, because this way, so there's no central repository that you have to depend upon. The second one is anonymity. Nobody really supposedly knows who owns these Bitcoins and how they are being transacted. So if you want to do money laundering, you want to somehow conceal your assets and move them around from one place to the other, from one country to the other. If you're engaged in all sorts of, shady activities, it's really helpful if you can use Bitcoin. However, this has become almost impossible now, because, as you know, if you are going to cash your Bitcoin into dollars, you've got to go through an exchange. And in the process, you have to go through a bank. The bank has to then convert your Bitcoin into dollars. The bank is now subject to AML and KYC regulations. AML means anti-money laundering. KYC is know your client. So because they have to go through this, your identity is going to be revealed. The only way you can avoid or maintain anonymity is if you buy a cryptocurrency like Moreno or something somewhere in Eastern Europe, where people are not being too scrupulous about your identity. You buy this there. At an East European or East Asian exchange, you convert your Moreno into Bitcoin, and then you bring it over here. So you have whitewashed your illegal whatever money through this complicated transaction, but you have to do a multiple set of transactions before you can hide your tracks. So the advantage of anonymity seems to have largely disappeared. The other thing which was very attractive was that a blockchain-based cryptocurrency would be almost unhackable, because every block has to be, chained to an earlier block using a hash, and getting to that hash requires intense computing activity, which is why blockchains are so energy intensive and why country after country wants to get rid of them. So that was another attractive feature. However, even in the first quarter of 2019, for which figures are available, over $1.5 billion worth of cryptocurrency was illegally stolen through various scams. Much of this loss was through the exchanges. So a lot of people have what they call hot wallets. So you take your Bitcoin, you store it on an exchange in a wallet, which is connected to the internet. And many people's wallets get hacked in the process. However, you can also buy what's called a cold hard wallet, and there's a lot of those available, where you store your Bitcoin or whatever it is, and your passwords, your public key and your private key and so on, and that supposedly keeps it safe. But nevertheless, to me, this is not a stable store of value. One, it doesn't seem to be anonymous. Two, it's not safe. Three, there are all sorts of ways in which a system can be attacked. And there are various kinds of attacks which have been done. So I can't understand why $250 billion worth of cryptocurrencies, and there are some 3,000 of these are floating around, are in the market. Now, do any of you see an advantage which I am not seeing? Because they are out there, people are buying them. There is very active trading. Bitcoin remains the most important. but I'm still totally baffled as to why this has enjoyed such popularity and continues to, in the face of many alternatives which seem to me to be equally attractive. So, what do you think? Anybody have any overwhelming reason to want these things to remain? Yeah, Chen.
So I'll just talk about the Chinese, like the startup like a culture, at least for the past several years. So a lot of entrepreneurs say there's like this the opportunity of blockchain, and not a lot of people understand, what's technology, what's the core value of this like this trend. They just initiate their own blockchain like currency and say this is a new future, and you attract like several waves of investors into it. You got a profit, and then you just, it's a little bit like the Ponzi scam, or you got the money, like hot money, and then you just withdraw from the industry, and you sit, and we have seen a lot of waves of this like rise and fall of like startups like focusing on like blockchain or cryptocurrency in China.
Right. Okay. Anyone else think of, I mean, other than for illegal purposes and for moving, dark money from point A to B, I can see some advantage, but if it's not anonymous, then it's useless. But is there any other, and also the fact that there are countries where the currencies are clearly not really very stable. You can think of a Venezuela or somewhere where you would want not to be holding the currency. But in those
So perceptions of other
situations,
people, okay.
dollarization is what happens. I mean, in an Argentina or a Cambodia, 80% of the transactions are in dollars. In Argentina, I mean, every time I'd get into a taxi, they pay in dollars. I mean, that was sort of a, so many countries with unstable currencies use dollars or euros or something. Why would Bitcoin be the currency or unit of choice? Not clear. All right. However, China is still somewhat supportive of cryptocurrencies and blockchain technologies. And I can think of some reasons why this might be the case. Remember, these, to run these miners need very, very sophisticated chips. And 3 Chinese firms are amongst the major producers of these particular types of chips, which are used by the miners in order to do the proof of work which they have to. So there's a sort of a manufacturing business, and Bitmain is one of them. Canaan is another. There is some third company. So these are some of the companies that produce the processors that miners use. The other thing there is that it uses an enormous amount of electricity. And so if you have a surplus of electricity, which has been the case in Inner Mongolia and places like that, where you have a lot of renewable energy, which there's no use for at any time and would go to waste. If you have a whole bunch of mining activities going on there, fine. They use the cheap electricity, they mine, they produce some value added for the miners, and as long as there's a net positive return, it's fine. And so far there seems to have been a net positive return, but this is not a particularly overwhelming reason, in my view, for supporting this kind of activity. But it goes along. But China has started to crack down on cryptocurrencies. And so let me go over what has been done to date. Any questions about, or any views on cryptocurrencies and blockchain? By the way, do you accept that at least blockchain is really an important new technology?
I think so. I think like blockchain is a how to say, a credit booking system, a new credit booking documentation system. I think it will like transform the whole like ecosystem for banking and maybe like government in the future.
Okay, first there are two types of blockchain. There's the ones which depend on proof of work, which requires, you know, a heavy duty computing activity. And then there's the proof of stake ones. And as I mentioned, there are two types. There's a permissioned blockchain system and there's the permissionless. Where the world seems to be heading, and particularly in China, is permissioned systems where only those who are, you know, part of a particular sort of grouping or a company or a supply chain can participate, and where they use proof of stake rather than proof of work. And the proof of stake is the amount of block of whatever currency you have committed to the system, so that you have skin in the game, so that if somebody hacks or some fraud is committed, you lose as well. And that is seen as a way of ensuring the integrity of the system. Okay, so now there is a lot of experimentation going with blockchain. 2 or 3 years ago, it was considered to be a game changer for the financial system in order to facilitate cross-border transactions. It has now extended to many different fields, medical fields, supply chains for, you know, poultry and fish and everything. Anything that needs to be time-stamped and needs to be a transaction need to be actually fixed so that there can be no tampering with it. So it's spread to all over the economic system. As I say, a lot of interest, a lot of experimentation, and lots of hopes riding high on the possible benefits that will be derived in terms of efficiency and economy and safety of transactions. Has it shown up in actual productivity terms? Not yet. Do I read a lot about it, more things happening? Not in the general literature, but I'm sure if you go into the specialized literature, there's a lot happening and many new patents are constantly being put forward. And many of the patents are trying to improve the efficiency and functioning of blockchains. Remember, it's very energy intensive, so the whole idea has been to try and make it less energy intensive. Secondly, it has been a slow process. So if you have, you know, thousands of computers that have to validate each transaction, it slows the whole process down. So the question is, how can you accelerate the process? So these are some of the sort of innovations that are being introduced with new currencies and new techniques being introduced all the time. Okay, anyway, let's leave that behind. Just all you need to remember, this is a way of making financial transactions more efficient, safer, securer, and all of those things. I don't think I'm going to ask you a technical question about them, but just don't forget that this is, for many people and for many financial institutions, considered to be a really important new development. And many hopes hang on its future. Okay, what has China done about it? Okay, China has taken a number of regulatory actions, and I think those you should be aware of. And I think it was triggered by the outflow of foreign exchange out of China during 2015, 2016. And the Chinese authorities felt that Bitcoin was being used by many people to evade China's capital controls, so currency control, during 2016. And you recall, China lost nearly $1 trillion of reserves as it attempted to support the the renminbi. And so the view was Bitcoin was one of the culprits, which made it possible for people to easily take money out of China. So, and at that time there were huge fluctuations in these cryptocurrencies. So the PBOC cracked down on these cryptocurrencies, and so I'll give you a few of the things they did. So in September 2017, the PBOC regulators issued an instruction saying that these initial coin offerings were a cause of illegal financial activity in China. And on September 8th, they shut down all cryptocurrency exchanges in mainland China. Thereafter, Bitcoin mining was also subject to some amount of regulation in order to reduce the scale of such mining. Remember, I mentioned that Bitcoin mining is one of the most energy intensive activities, and I think the authorities decided after they shut down the various cryptocurrency exchanges that they needed to also curb this mining. So that was again subject to reduced activity. So Bitcoin trading volume fell from 90% of the global total in 2016 to 10% in October 2017. So until that time, China was at the very heart of the Bitcoin trading activity in the world. And once the PBOC decided that they wanted to check the growth of this activity, it sort of collapsed very quickly. In January 2018, power supplies to Bitcoin miners were also reduced. So previously they were able to, as I told you, access cheap power at relatively low rates. This was curtailed in January 2018. In April 2019, China allowed Chinese citizens to hold cryptocurrency assets, but decided to limit their use as a method of payment. So you could hold these assets, but you could not use them to settle any transactions, at least in mainland China. And as a consequence of this, a lot of the brokers who used to be dealing in these cryptocurrency assets decided to get out of the business, and some of the exchanges closed down. So if you needed to trade, you had to trade offshore in Hong Kong or somewhere. So that's all I want to talk about with regard to cryptocurrencies in China. But the more important part is the issuance of digital currencies. Okay, so the sort of the big step in the future is going to be the issuance of digital currencies by central banks. I think that's, if we look ahead as to an important development in the future, I think that's going to be one of them. And that could have important implications also for the use of the dollar and the internationalization of the renminbi. Okay, let's pause for 10 minutes and then come back and look at digital currencies and their issuance by central banks. Are we?
fucking time. And
exhausted the potential. Now, 1920 from sketch, you have a piece that
I wonder, did you, maybe when I was first children and I would
themselves, after which Colleen and I have some comments, and then we'll open.
Michigan, Louisiana, Connecticut.
And if you're red, you have to go to the hospital.
Aged
had barely begun to rouse itself on the morning of
They discussed weren't carrying guns.
Be permitted to join them. To back them.
Before we continue, I want to say a couple of things, which is one, that everybody should have at least minimum familiarity with blockchain and how it works, because it is a technology that's going to be with us. And, you know, to be in a conversation where the word comes up and somebody keeps talking about it and you know absolutely nothing is, I think, not acceptable. We can't claim to be living in a cave. So at least the minimum familiarity is really desirable. The second thing is that with regard to cryptocurrencies, you should have some sense of why it is there. I mean, I can think of many reasons why it shouldn't be there, but there are a lot of reasons why it has survived and flourished and continues to grow. And so if I look at, you know, if you type in advantages of cryptocurrency, a whole bunch of things come up. So for instance, ease of transactions, ease of asset transfers, more confidential transactions, transaction fees are lower, less likelihood of fraud, greater access to credit, easier international trade, easier individual ownership, adaptability. So there clearly are a lot of people out there who think that this serves a useful purpose. And if you look at a cryptocurrency such as Ethereum, the fact that you can also embed in all kinds of contracts into it and payments with regard to contracts at a certain date and time, I think it kind of does facilitate transactions quite a lot. So I would suggest that everybody at least look at the article which has been recommended on how blockchain works, and do keep in mind both the pluses and minuses of cryptocurrencies, so that you can answer a question of this kind should that come up. Okay.
Professor?
Yeah.
I guess I would also add, one of, I think, the main benefits is the fact that, and this is obviously the concern, I think, of the Chinese government as well, is just how easy it is to transfer money between countries, because you can transfer money internationally. There is no barrier or even anything that there's no hurdle you have to jump in order to do that when you're using cryptocurrency. Yeah. So that's sort of a pro or a con depending on your perspective. But I would also add, you mentioned the government sort of banning, exchanges and things like that in China. And I would also just point out, they have said that officially, that last fall, for example, there was a raid on the offices of a cryptocurrency exchange in Shanghai. So that was obviously continuing to operate. So I would just sort of put that out there, as well as sort of there's the regulation and then there's the reality.
Okay. I should mention that, in order to use an offshore exchange in China, you have to have a secure VPN. And increasingly, the secure VPNs are not available in China. So you can hold it. And I agree that you could, in principle, transfer it easily and seamlessly, take currency or cryptocurrency out of China. But now I don't know how exactly one would do it without, as I say, having this facility. Because now the censors can eavesdrop on virtually anything, it seems.
Well, I think they can keep track of what you're doing, but people can still transfer cryptocurrency without a VPN.
Can they do that?
Yes.
It is possible because, you'd have to trade it. I mean, if you wanted to transfer or do anything, you'd have to trade it on an exchange. There were exchanges in Hong Kong. I don't know whether they exist now. And if I'm sitting in an office in Beijing, I want to transfer my cryptocurrency, I could buy and sell on that exchange. But will I be invisible to, the thought police in observing this?
Well, you can transfer the cryptocurrency and even do like peer-to-peer trading without an exchange at all. Okay. But I think even with an exchange, it's a question, I guess, of how much the Chinese government regulates exchanges that operate in China, regardless of whether they're actually based in China. The one that I mentioned, for example, had offices located in China, but any exchange can operate in China when people use their internet to access that exchange's services.
Okay. So it's not so completely sealed off yet. Okay. All right. I'm not going to try, but please don't also. Stay away from cryptocurrencies until they become so mainstream that, buying stable coins becomes kind of the norm. I'm not sure what sort of world it will be, but maybe that sort of world will finally materialize. The reason why I don't think that the future of cryptocurrencies is that rosy is because of the issuance of digital currencies by central banks. Now, as you know, central banks have been issuing digital currencies, digital money for a very long time. And in fact, in most places, 90% of the monetary base, the M2 part, takes the form of digital currency. There isn't any sort of physical side to it. It's only a very small part of the monetary base which exists in the form of physical currency. And the amount of the share of the digital currency increased enormously with quantitative easing and the expansion of credit following the 2008 crisis. So there's a big expansion in the share of the digital share of currency. And also in countries such as Sweden, now also increasingly in China and in other European countries, the use of paper currency is really going out of fashion. People find it cumbersome and unnecessary. And in Sweden, for example, it only accounts for about 6% of bank liabilities. And it's only just 2% of M2. So you can see that over a relatively short period of time, and we are talking about, a couple of decades, the share of paper currency has diminished very, very rapidly. The digital share of the monetary base has expanded from, 30 years ago, it was about 30% of M2. And now in most countries, it's 80% of M2 or more. So big shift has occurred away from the use of non-digital type of assets in banks and the use of paper currency. However, as you well know, there is something like $1.2 or $3 trillion of paper bills, US dollar bills floating around the world. The demand continues to increase. and a very high fraction of these are in $100 bills. And people still find them useful as a store of value, as a medium of exchange, and as a way of staying under the net, to remain invisible to the regulators and to the central bank authorities. And as I told you also, this is a source of seigniorage to the Federal Reserve Bank, and therefore, while there may be a lot of talk about moving away from paper currency, and for instance, Ken Rogoff has written a very nice book about it, it is still a source of, easy money for central banks, which earn seigniorage. So I don't see it disappearing soon, but I see its share shrinking. Now, in the Chinese case, with the advent of cryptocurrencies and the increasing enthusiasm for blockchain, I think about 2015, the People's Bank of China set up its own sort of institute to study the possibility of introducing a digital currency. And so they did a lot of experimentation with how it could work. They issued quite a number of patents, and it's the issuance of the patents that alerted others to the fact that the PBOC was moving pretty rapidly in this direction and seemed very serious about it. I mean, Sweden is another country where this is treated with considerable seriousness. So then I think quite suddenly, the PBOC launched a trial of currency, and this has been, there's a pilot has been launched in 4 cities in China, and this was launched, I think, must be just a month or 2 months ago. And the cities are Shenzhen, Suzhou, Chengdu, and Shuanggang. I'm not sure why Shuanggang is there. Anybody? I had no idea where it is even, but is anybody familiar with it? By the way, where is it?
Shuang is nearby Beijing, so it's like so this is all about Beijing's removal of non-capital functions. So they try to build a new,
I see. Yes.
Yeah.
Okay. Now sorry, I'd forgotten all about it. Okay, the way it's going to work is that civil servants will be remitted half of their transport subsidy in a digital form. They will install an app on their phones, which will be used to transfer the currency into their bank accounts. And this currency, this digital currency, will be used for transactions with participating merchants. So, this is all a fairly staged affair. A captive group is going to get this money on their apps, and they're going to then start using this money with merchants who are willing to participate on this, and who presumably will install some software on their systems to, in order to enable the use of this currency. If it works out, then more and more will be issued, and with some substantial consequences. And my question to you is, what is the advantage to the PBOC, and what are the likely benefits of widespread use of a digital currency? What do you think? Why would the PBOC take a lead in this and actually be pretty committed to increased use of digital currency?
Can I ask a question about this? So maybe this is a dumb question, but I don't get the point of a digital currency when the like if you are getting part of, your subsidy or whatever in this digital currency, and then you can spend it at certain merchants, why not just get the exact same amount of money in yuan or whatever? Like, what's the point of it? What value does it serve that would not be served by just having it in regular money, just held in your bank account?
Well, it is actually denominated in yuan, so it is identical with the paper money. So it's yuan, but digital yuan.
But isn't that just exactly what it means to have yuan in your bank account? Like, what's the difference?
Okay. Yeah, Ben. Yes. Okay.
Also, I've been thinking to what extent is the difference between the cryptocurrency and the fintech we cover from last week? Because, I mean, back to Katrina's question, it could be just to reduce the transactional cost in many ways, but
Well, yeah, sorry, Emily, yeah.
Oh, yeah. So on kind of both of their questions, I kind of see it sort of as the government trying to do WeChat Wallet. I'm not quite sure how it differs so much from that. And I can see the benefit from the government's point of view on having more direct control over kind of these digital currencies like people have in a WeChat wallet or a Alipay account. So kind of similar, but more direct government involvement. I don't know if that's just a bit cynical of me.
No, you're right. I mean, firstly, when we were talking about fintech, we are talking about payment systems and by new institutions that have entered the market and are now competing with the banks in order to provide services, more inclusive services to people who were unbanked or who didn't have access in the past. But here we are talking about a particular instrument that is being used, cryptocurrencies. And, as Emily, as you're saying, one of the reasons is that by reducing or almost eliminating the use of paper currency, the central bank has much, much closer oversight over how transactions are being done, where resources are distributed, how transactions are being done. So the degree to which they can monitor and control these activities greatly increases if you drastically reduce the use of paper currency. But more importantly, also, this in a sense short circuits the other providers of digital wallets and like WeChat and so on, and the banks in particular. So in a way, it is disintermediating the banks because now it's the central bank that is issuing the currency, and it's the central bank that is providing one-stop clearance systems. So you don't have to go through a credit card company, through a bank, and then and then through the central bank. You go directly through the central bank, which is now acting as your clearer, as of the payment processor, as well as the issuer of the currency. Okay, yeah.
So I have a question. So can I say, like, if I want to get my transfer my digital currency in yuan into the real money, like I can I can touch on them, and so can all of the people with digital currency do that at the same time? I mean, are there so much physical cash in Chinese yuan that can be transferable?
Okay, in principle, if the central bank deposits digital yuan in your account, for whatever reasons you want to translate that into paper money,
yeah,
you should be able to do so. I haven't read anything which suggests that this digital money, which is equivalent to fiat money and the paper yuan, is not actually something that you could do. Now, going forward, it may well be that if this experiment proves successful and the objectives, or one of the objectives of the central bank is realized, which is to have tighter control over the distribution of these monetary assets, then maybe you will not be able to convert it into paper money. But for the time being, as far as I know, you can. So it's identical with paper money. But
yes, so sorry, go ahead. Yeah, so I have another comment on that. I think what Chinese government currently is doing is actually falls behind the long existing phenomena in China, that I think the digital currency development in China is followed by the enormous amount of online shopping. the like digital shopping like Taobao, Tmall, Alibaba, or like something like that. And then we have the booming of the digital currency. And I think this can actually, I think even in the international market, digital currency can eliminate a lot of intermediaries of banks, and also the like unnecessary like exchanges, all the procedures. And I think that can actually raise the position of Chinese yuan in the international market.
No, I agree. You know, there are two things here. One is that this increases competition in the payment industry. So now you have, you know, central banks who have entered and are ready to compete with other providers, the banking system, the various other companies that have entered this market. So that's one thing. The other one, as you rightly said, this reduces transactions costs because it doesn't have to go through multiple intermediaries, and probably it's much more secure if it is backed up by a blockchain system that actually has real integrity. Now, the difference will be that this blockchain will be controlled by a single intermediary, which is the central bank. So it's not going to be a permissionless system with many participants. It's going to be one system. So you lose that anonymity, but perhaps you make it up in terms of efficiency and low transactions costs. So quite right on that one. Any other thoughts? So what are the other advantages? I mean, have to be some, because otherwise, yeah, go on, Kathleen.
Well, this isn't an advantage, but I was going to say, it seems to me like calling it a digital currency is kind of a misnomer because it's not a separate currency.
It's not. I agree. It is separate. That it's, well, no, it's not really, because it's supposedly the same thing. One of the other factors which it may contribute to, that it facilitates the making of central bank policy. The reason being that, you know, in order to affect interest rates, the central bank has to move the federal funds rate or some interbank rate or some rate at which it lends money to various participating banks. Now, but when it does that, the way it affects interest rates throughout the market is a relatively slow process and may not even happen. So the central bank can pull certain interest rate levers, but in the market system, it takes a while for these interest rate effects to percolate through. But if you have a digital currency, you could probably be able to affect deposit rates for households almost immediately, because you'd be, you know, the central bank would be essentially setting the rates and every household would immediately be able to take advantage of them, rather than it working its way through some sort of many intermediaries to the banking system. So this is considered another advantage, that it facilitates that monetary policy, banking monetary policy.
Wouldn't that require households to be borrowing directly from the central bank, though, as opposed to market participants?
Yes. So the central bank is, you know, by the central bank would set the rate and every bank would have to follow it.
So would that also undermine the role of commercial banks?
Yeah, that's the big problem. And I imagine that they have taken this into account, because, as I said, what is going to be happening is a process of disintermediation. That is, the central bank has now moved into the same realm in some respects as the commercial banks. And the question is there some advantage? Maybe there is an advantage in terms of facilitating payments and reducing transaction costs, but there it is. You would shrink to some extent the banking system. And I don't know whether that's an advantage or not, but it seems to be considered as an advantage. All right, what else?
Yeah, I'm just curious, do you think PBOC can have this capacity to deal with this large scale of like transaction, like it's because if you use the digital currency and if people also want to cultivate into the mainstream payment methods, then each of the transaction will have to go through either the data center or some like interface of PBOC. I'm just wondering if PBOC is capable of dealing with this.
Look, one of the way I understand it is that all this research they are doing and this trial balloon that they have launched in Suzhou and other places is a way to try and figure out as to how serious a burden it would place on the PBOC. So if the burden is too great, then maybe this experiment will not go forward, or at least will be spaced out a lot more till they have figured out better technologies. But I want to go back to this issue of disintermediation. There is another aspect, there's another related advantage to this, that by, in a sense, shrinking the role of commercial banks, how is that advantaging monetary and credit policy in a crisis? What do you think? Because this is considered one of the advantages of the central bank getting into this business of digital currency.
I guess those QE measures are injecting liquidity in the market, and monetary expansion will be a lot easier without going through commercial banks.
Yeah, that's true. But you see, what also is the case is, you remember the too big to fail issue, that some banks have to be supported and rescued if they get into a problem because they are so large. If the central bank gets into this business of issuing a digital currency, and all the other banks, the role other banks play in the payment system is lessened, then it will mean that no single bank would be too big to fail. That is, no single bank's failure would bring down the payment system, because now the payment system would be, not largely, but the central bank would have a much larger role to play, and therefore could prevent any such breakdown. Right. Yeah, Emily?
I'm not sure if this might be a sort of a dumb question, but then wouldn't that just kind of make the central bank too big to fail? If they're the ones with all the credit risk now? I'm not sure. I'm guessing no.
What can happen and is happening is, as you know, in every country, governments are expanding credit at an incredible pace. And essentially, this expansion of credit, or at least stimulus, is being validated by the central banks. So the central banks' balance sheets are expanding enormously. So, with the Federal Reserve, it's going to grow from whatever it was, 4 trillion to 12 and 16 trillion. So essentially what you're seeing is a monetizing or a fiscalizing of the central bank. Now, you may think that's a really bad idea, and I personally think it is not such a great idea for the central bank to be playing what amounts to a fiscal function. And so it ends up with this enormous amount of stuff, bonds, securities, government bills, and so on its balance sheet. And as you know, one of the main concerns is, how do you unwind this when situation returns to normalcy? And you unwind it in two ways. So now the government has acquired this enormous debt, which is being held by the central bank, and you've got to unload it somehow. So how do they unload it? How do they shrink these balance sheets without causing big market upset? There are 2 or 3 ways in which. So what do you think?
You could at least for the Fed in QE3, for example, you reduce your purchases and you let it amortize away.
Right. So, and that gradually happens over a period of time. And if the economy is growing rapidly, it happens faster and so on. Right. But what other ways do governments use to do this? Chris, you got any? What else do you think they do?
You could just sell the whole balance sheet and pray that inflation doesn't come back.
I know, but you know, if you do sell it, then interest rates spike, and no government now with an enormous amount of debt wants to see interest rates spike. So there is a lot of pressure on the central banks to hold interest rates down because the debt has increased so much. And what that means is financial repression. So you and I, as depositors in banks, are paid suboptimal interest rates, far below, let's say, the inflation rate. And that way subsidizes the government and keeps interest rates down. So when a government has a huge debt burden, it either inflates it away. So it allows inflation to go up, and therefore that, the real value of that debt diminishes. But no country wants that because electorates are really opposed to high inflation, including especially in China. So the other alternative is to keep the interest rates down, and that means financial repression. And virtually every country has adopted this policy of financial repression following a period of massive credit expansion. Now, as you say, Emily, there's a situation here. If you have a central bank that is basically a fiscal instrument and does not have autonomy, then you run this risk. Yeah. Okay, keep going. How about a few more thoughts on this? Jackie, yes.
You mean the topic we are talking about? How to like bail out the central bank if something happens?
Oh, I don't know. Central bank impervious to this sort of.
It is like I'm just curious if central bank is like too big. Like if something like goes wrong, who should like bail out it, or the government itself would break down or something?
You see, what I say is that if you can borrow in your own money, then you shouldn't have a problem. But very few countries are in that sort of happy situation of being able to borrow in their own money. The United States can, and countries where there are very high rates of savings, like China, Japan, Korea, maybe Korea also, where these high savings enable the governments to borrow from households, and therefore, kind of balance the books without having to borrow externally and therefore run up large external debts. That's one way of going about it. However, the risk is if you do expand credit excessively and you do have inflation, the end result of that is a dollarization of the economy. And once the economy gets dollarized, then the central bank loses a lot of its power in the monetary policy domain. And therefore, and also seigniorage completely sort of vanishes or gradually vanishes.
Yeah. So like just based on that, so for like right now, China has a large burden of the like credits. So do you think it will like followed by a depression or a dollarization of the economy?
I don't think.
Or like cryptocurrencyization of the economy. I don't know.
I don't think so. Given the crackdown on cryptocurrencies and, to what as Katrina was saying, you can still do some trading, but it's really pretty restricted. I don't see much scope for that. Capital account controls mean that you can prevent an outflow. So China has walled itself as much as any country can. The problem is that now overall indebtedness of all elements, central government, local government, is 310% of GDP. That's really high. That's higher now. That's only Japan comes close. So at that level of indebtedness, you've reduced your degrees of freedom to expand credit, to use fiscal policy, as Chris was pointing out, all of these things have become less possible, which is why you don't have as much stimulus now as you did last time around. Okay, but there's any other thoughts? There are one or two other things that seem to be, so the too big to fail thing is something, but as I said, the disintermediation of the banks can be seen as a plus or not a plus. Any other ideas?
I feel that this digitalization of currency may have some impact on the internationalization of RMB, but I'm not sure how that scenario played out.
Yeah, that actually, and that's one of the reasons given why the PBOC is pursuing this, that it feels that by issuing a digital currency, which could be then traded across borders, that this will lessen the dependence on the US dollar as a trading currency and increase the role of the renminbi. Now, personally, I'm not really clear how that would work, because if you continue to have capital controls and you have a lot of foreigners who hold your digital currency, I'm still not clear how that would work. So let's say I'm a Kazakhstan and I'm holding 10 million renminbi worth of digital currency, and I've earned this by selling oil to China. Now, this digital currency, in principle, could be paying me an interest because it is showing on the books of the PBOC. So the PBOC pays me this. Okay. But you remember the issues we raised about an international currency, which was that one, it should be liquid, you should be able to withdraw it anytime, that it should earn interest in liquid markets, all of those things, and that you should have the protection of a strong judicial system and property rights. Now, if my account is being held by the PBOC, what assurance do I have that one day I may get a call saying, I'm sorry, your account is frozen, goodbye, don't call us? That's why I don't see, by making this into a digital currency, that you completely negate the problems China has still with internationalizing its currency. Okay, so but nevertheless, having said that, this is one of the reasons given, that eventually digitalization and widespread acceptance in many countries of a digital renminbi will be one of the ways of expediting the internationalization of the renminbi. If you find literature on this, please share it with others and with me. Because I myself am not clear how this makes it easier.
Professor, just building up on your point, I'm just curious, whether recipient countries or trade partners for China will pay a positive attitude towards this digitalized RMB, because in this pattern, banks or regulators in local markets will have less authority or influence towards the transaction, and they may be very cautious about this increased influence of PBOC in their own market.
No, I agree. Because in addition, the digital renminbi will have to be held in accounts in banks in other countries as well. And they will then have to get into this practice of housing digital currencies on their books. Now, secondly, the thing is that if you hold dollars, you can invest in a wide range of assets in the United States of varying degrees of riskiness and varying degrees of return. But if you are holding a digital renminbi, do you have that option, or do you have to settle for the one rate which the PBOC might provide? Or can you take your money out of the PBOC account and invest it in some other instruments in China which offer you a higher rate? So all of these things are out there, and personally, I'm a little blank about how it would work out, because one, it's in its early stages. PBOC is just trying it out. I haven't seen it working on any scale in any other country. And, in Sweden's such a small place, doesn't make much difference. In the case of China, it would be a big deal. Okay, still there are one or two other things to think about, which China is particularly concerned about, and therefore okay, reduces bank runs. So I mentioned this too big to fail, but to the extent that that the PBOC is really the repository of these digital currency deposits, there's less fear. There's a trust factor here. Everybody would trust the PBOC. After all, that's the bank that underpins the deposits in all other banks. And so runs on the PBOC are unlikely, and therefore one of the sources of illiquidity in following a crisis is bank runs, and so you reduce the likelihood. Again, as I'm saying, you are disintermediating a segment of the banking system in the process. Also, one of the other things which seem to matter a lot is this whole business about money laundering, gambling, terrorist financing, all of those things which probably it would be much easier to control. If you read Ken Rogoff's book on getting rid of cash, he makes a really big deal about it. Even Larry Summers got into this act and saying that we should get rid of currency, particularly we should get rid of $100 bills. What they focused on was 500 euro bills, $100 bills, anything which is a large denomination, because these are the bills that are not used in day-to-day transactions, but are used for nefarious purposes. By the way, which country still issues a $10,000 bill? I don't know whether it looks like a paper thing or it's some large piece of it's a large document.
Is it Hong Kong?
Yeah, go ahead.
Is it Hong Kong?
No, Hong Kong is no. It's not. But you're getting very close.
Like Cambodia or Vietnam?
No, but remember, it not only has to be a very large denomination, but it has to be the currency of a very stable country which will be a good store of value. It has to be a really good store of value. So,
Korea. Korea.
Korea is, it has a long and sort of checkered history. If you find, I worked on Korea since the 70s, and the inflation was high. It's
Thailand.
Japan.
Singapore.
Thailand.
Singapore, 10,000. And Brunei. So if you want to cross a border with a vast amount of money, but in your pocket, you've got to get it from these kinds of places. Otherwise, it's a substantial amount. Okay, so that's another reason. There is one other factor which has been discussed. Again, I'm not entirely sure that I agree, but the feeling is that these companies such as Alipay and others that have entered the market, and because of network effects, have created a very large number of people who are involved in their payment systems and make use of their payment systems. The worry is that that this vast network is a source of weakness, and that somehow having a private system that runs this vast payment network is I don't know. Maybe I don't know whether to what extent this really matters. But the feeling is that having the central government run this vast network is a lot safer than having a private entity have such a large payment system. So, and one of the reasons why the central government may want to have a control over the payment system and not let others get involved in a major way is what we see happening now, which is negative interest rate payments. You're all now familiar with this, that in Switzerland, in some other countries, interest rates have gone down so far that you essentially are paying the bank to hold your money. And that negative interest rate is considered by some monetary policy people to be needed because you are in a situation where the economy is stagnating. And in order to get it out of the stagnant situation, you've got to have interest rates that are really at an extremely low level. But if you have a payment system that is private, it would be very difficult to push interest rates down into negative territory because everybody would withdraw. However, if you are the sole provider of deposits through your digital payment, through your digital currency system, then the central bank, in effect, could more easily bring interest rates into negative territory. And that's also part of financial repression, because if you again have a huge public debt, this is one way of sort of shaving interest payments. Remember, and the reason I say it is because in many countries, interest payments on government debt are a non-trivial part of budgetary outlay every year. In some places can be as much as 15 to 20%. And so all governments have a great interest in keeping interest rates down, especially if they are big borrowers. Because, Chris mentioned it also, but the only real way in which a government can get out of this bind is by running a budget surplus for long periods of time and therefore paying down its debts. And to run a big surplus is something most countries are unable to do and unlikely to be able to do. Katrina, why do you think they won't be able to run a budget surplus?
I mean, because every person who lives in the country says, well, why is that money sitting in your bank account and not benefiting us?
Well, okay. One of the reasons is the most unpopular thing for a government to do is to raise taxes. And one of the ways in which you can run a surplus is you raise taxes, you cut expenditures. And one of the reasons why cutting expenditures is becoming harder and harder is because in the US, why? What do you think? Anybody? Or in any other country, by the way, developed country, and even in China looking into the future. What's going to make it really hard to cut taxes and shrink the state and run a surplus?
Demographics.
Yeah, okay, but what about it?
Sort of an aging population means that in the US, for example, more money going towards Social Security and things like that, and a smaller percentage of the population, part of the active workforce contributing to the tax income.
Right, exactly. So what is going to happen? I mean, the US already share of health expenditures is approaching 20%. It's currently around 18. It went down, by the way, in the last 2 months. And the reason it went down was that hospital admissions and other visits to doctors drastically fell off. So, but that's just a temporary blip. It's heading towards 20. So aging, which means a lot more expenditure on Social Security and so forth, and also on healthcare. So these are the two costs that are going to drive budgetary expenditure in the future. There's an interesting article which came out the other day about how the actions taken to, in response to the COVID shock are distributionally highly inequitable. Why do you think they are distributionally highly inequitable? Emily, what do you think?
I was just thinking of what was it, $10 million Shake Shack got? Which seems highly inequitable.
Anybody else? Distributionally, they are highly inequitable. Okay, the reason seems to be that, the people most affected are 70 and above in age group. The least affected by this are the younger people, the more active people. So what is happening is that in order to protect the people who are most vulnerable, it's the most productive, the most productive elements in the population who are being, in a sense, penalized. So that's one of the, I was struck by this. I hadn't quite thought about it because, I'm in that category of person. But then I thought about it and I said, yeah, that's actually quite true. And in addition, if you think about the healthcare expenditures, once again, it involves an intergenerational transfer, major intergenerational transfer, because it's the younger people who are going to be paying the taxes and so forth, who are less likely to be using the healthcare services which are supporting the elderly. And this is, as you can see, this happening very rapidly in China, where the population is now aging quite rapidly. Okay, I think this more or less is all of that. There are, by the way, downsides, and I've mentioned in disintermediation and such like are some of the things to consider. But my feeling is that digital currencies are probably here to stay. There'll be a gradual easing in. Probably they will use some sort of blockchain or other kind of technology to facilitate this process. But right now, the future looks so bleak that it's hard to think 2 and 3 and 5 years ahead as to all the good things that are going to happen. But I'm sure a lot of good things are going to happen. Okay, let's talk a couple of minutes about the exam, and then we'll in the class. So,
Sorry, could I have a quick question?
Of course.
What would be the impact of this new government-issued digital currency on the fintech industry in China, apart from the fact that WeChat Wallet and Alipay will be seriously affected?
Actually, that's a great question. I haven't seen anyone come out with a paper which says, okay, the government moves ahead with digital currency, and a lot of activities, in a sense, now transfer to the People's Bank, clearinghouse, the payments, and so on. But you have these new entities like Alipay and others out there, the P2P platforms, all of these which are providing services. And the question then is, will they continue to flourish and be a source of lending to all kinds? I'm at a bit of a loss as to how much they would be affected. I know, as you said, that the payment part would be affected, but when it comes to the lending and portfolio diversification and so on, I'm actually a little bit at a loss. Because let's say we all enter a world of digital currency, and we are already pretty digitalized. Does the fact that the central bank is issuing it make any difference? Off the top of my head, I would say it only makes a difference when it comes to payment processing by banks and by others, but it would not affect any other activity because already everything, as I say, is pretty much in the digital arena. But this is just off the top of my head. I haven't thought about it and I haven't seen anything written about this. Again, because they're only dipping their toes into the digital currency waters. However, if you see any interesting article, please send me a link and also share it with everyone else in the class.
I'm just thinking, would a government-sponsored online payment system or online digital currency reduce the rate of financial crime, as the company can like if you actually take other people's money, the government can just shut down your account, and you cannot change it to other currency. So it's basically everything is in the government's hand.
Yeah, I mean, and that's part of the reason why the PBOC is so interested in pursuing this. It is to greatly increase monitoring, control, oversight, and it sort of sits side by side with the social credit system and other techniques that are being used as a means of keeping close tabs on what the population is doing in terms of physical movements, in terms of every transaction that they do. So it leads to far greater transparency on the part of transactions that are being done through this channel. And the more control the PBOC has over the payment system, the more oversight it can exercise over all sorts of transactions. Likewise, cross-border transactions would also become much more transparent as far as the PBOC is concerned. Yeah, so as a control mechanism, it's a great idea. Okay, so other questions? Anything? I understand the exam will be presumably sometime on the 15th. Does any one of you have a date? Do they issue a date or what? No? Chris? No? Nothing? Okay, well.
I think it's on the 16th.
It's on the 16th?
Right.
I just assumed it was the same class time, but in 2 weeks.
Okay, so yeah.
But I'm not sure about that.
Yeah, I'm doing a bunch of oral exams. None of you is taking it, right? I don't think I know. I didn't see any name. Capstone or something like that.
I think it's actually May 14th. Is that Thursday?
Is it? Okay. 14th?
Yeah, I think so.
Okay. Well, I follow the same sort of format. I'll provide a bunch of questions. You'll have whatever 4-ish hours to do them. Typically, the questions will ask for a point of view also. So you provide evidence, information, all that, but take a position. And as I say, there are a number of questions we have tackled, which are open questions. And I say, I can express an opinion, but you can argue on both sides. So also put in dates and where necessary and some numbers as appropriate. Don't do too much hand waving, actually. There's some facts. And also, please, those who haven't, send me your term papers. And if I'm very energetic, I will put in comments in the margin somewhere and send them back to you. If energy fails, I may not be able to do all of that, but I'll try. And good luck. Again, stay safe, prepare hard. I'm sure all of you will do really well. You've been a great class to teach. We enjoyed it. Even this Zooming business. I'm now using something called Microsoft Teams, but there you can only see 4 people at a time. But the reason they're using it, they're saying it's more secure and blah, blah. So anyway, okay, great. So enjoy the rest of the week. Have a good time. And I guess we'll be seeing you around if we have some kind of a normal semester next year. Bye-bye.
Thank you, Professor.
Bye-bye.
Thank you.
Thank you,
Professor.
Professor, I wonder,
Professor.
do you have an office hour right now, or?
Yeah, we can have an office hour, so we can talk.
Yeah, okay, sure, cool. Yeah, so I have a question. I sent you an email about my capstone about the Chinese exchange rate. I've read through all the like papers, articles you sent it to me, but still I'm like struggling to find like theme argument of mine. I don't know like what argument should I make? Like it sounds a little bit dumb, but yeah, so I want to write a paper about the factors drive Chinese government to change its exchange rate because it is a kind of a fixed rate system. So I wonder like for some Western countries, electorate countries, they have interest group lobbying for the for government to take certain measures to change the exchange rate, maybe like they have this kind of interest group. But for China, I don't know what drives it to change the exchange rate. Do you think it is responsive, like for exogenous how to say uncertainties, or it is actively to seek for some results to change its exchange rate?
Okay, you see, if you think of, if you have a market determined exchange rate, okay,
Yeah.
and you have a situation as in China that you have a large current account surplus and a large trade.
Yeah.
In a market determined system, you would see an appreciation of the exchange rate up to a point at which much of this, over a period of time, this trade surplus is eliminated.
Okay.
Now, in the Chinese case, there's a concern that if you allowed market determined exchange rate and you open a capital account, you would have an outflow of capital from China, which would, in a sense, negate any upward pressure on the renminbi. So, in fact, it could actually depreciate. Now, China is operating in an environment where a number of its trading partners are very sensitive to what's happening to its exchange rate.
Yeah.
Because one, it competes with countries in Southeast Asia and elsewhere in a range of commodities, and the United States, as you know, is very sensitive about it. So one of the factors and one of the pressures which, in a sense, compelled the government to act and to go for a managed float linked to a basket of currencies was the pressure from trading partners to permit appreciation of the exchange rate. You know, it was blamed as a currency manipulator and all of those things. So that was, I think, one source of pressure. Secondly, rather than move to a pegged rate or to a kind of floating rate adjusted with respect to the dollar, there was preference to go for a rate pegged to a basket of currencies because that gives the government more freedom to adjust how much it changes the sort of currency on a day-to-day basis, the rate of the currency. Because, you know, you can have some weighting of other currencies in your basket, and you needn't be utterly transparent in the weights you provide or how you adjust with respect to those weights, which is the case in China. So if there's pressure that was coming, the pressure was coming from trading partners and the fact that China was running a really massive trade surplus and current account surplus, which was creating issues for itself and for everybody.
Okay. Yes. So I think that really helps.
Okay.
Yeah. Okay. Another following question is that, do you think I should like mention something like government debt and also the stock market? Do you think that is related?
To whether or not it allowed for a flexible rate?
Yeah.
You know, normally for not a country like China, but for other countries that are running trade deficits and where the currency is under pressure, if you went for a sort of market determined rate and the currency depreciated, then the debt burden increases. As you know, in the case of Thailand and others, when they had this currency crisis, one of the problems they faced was the huge increase in debt burden in local currency. In the Chinese case, because external debt, at least sovereign debt, is relatively small, there isn't that much of a concern about the currency depreciating and therefore increasing the local currency amount which has to be used to service this debt. So I wouldn't think that the debt issue is critical for China. However, that said, there is substantial borrowing by Chinese companies in the dollar market. So dollar-based borrowing by Chinese companies is non-trivial. It's pretty large.
Okay. Yeah.
If that's the case, then any depreciation of the renminbi affects their ability to service that borrowing, because they are getting their earnings in local currency.
Okay. Yeah. So like one last question, maybe a little dumb. So do you think like RMB is currently relatively undervalued or like overvalued?
Well, the IMF believes that it is trading at fair value. When I look at the calculations by Menzi Chin, who follows them, he's one of the economists who keeps track of things. They all seem to be saying that there is little evidence of over or undervaluation at this point. And as you know, the US government has also not expressed any, grave concerns about this. Again, if you look at what's happening to the current account balance, the surplus was gradually narrowing.
Yeah.
However, there may be a change, and the reason might be if investment actually declines somewhat, while savings remains high and precautionary savings increases, because households may have taken a hit. So depending on where this savings and investment heads, you could see a larger current account surplus. If the account surplus becomes really large, then you will hear demands made by other countries, trading countries, that the renminbi may be undervalued.
Okay, I understand.
It depends on domestic inflation as well. If the inflation remains very low, then the likelihood of undervaluation is somewhat higher. If the inflation relative to other countries, because everybody is throwing credit out of the window, and that some countries may actually have experienced high rates of inflation. China may have low rates of inflation.
Okay, yeah. So just summarize what you have just said. So to value RMB, I can take like several perspectives, including how the current account surplus, and also the relative inflation rate compared to other countries. So also I'm considering, can I use like the Big Mac index to?
Yeah, you can. In fact, you should use a number of indices. The real effective exchange rate is the one which is the most reliable, and so the IMF provides an index tracks the real effective exchange rate, the nominal exchange rate, and so you can see over a period of time what has been happening to the renminbi. In addition, the Big Mac index, there's also some others as well. So it's always useful to have a multiplicity of these indices.
Okay, cool. Yeah. That's all my questions. Really helpful. Thank you so much.
Okay.
Thank you, Professor. See ya.
Bye.
Bye.
Well, if you look at what China has been doing in the last year or two, it has been trying to make it more attractive for foreign financial firms, banks and others, to invest in the country. And, I would see this as a prelude to gradually easing the capital controls, because the very fact that China wants to continue to attract these companies, and the very fact that it is still very open to foreign direct investment, and in fact continues to incentivize this foreign direct investment, suggests to me that down the road they do expect to have some easing of capital controls. Otherwise, there'll be a limit to how much these foreigners will want to invest in China. Well, look, I have two views on this. One is that if I just look at what they are doing in terms of attracting FDI and foreign investment in the financial system and elsewhere, and their ambition with regard to the BRI and expanding influence and internationalizing the RMB, when I think on those lines, it seems to me that it would be almost inevitable and natural to open the capital account. But when I think of what other things it's doing, this talk about decoupling, this talk about deglobalization, the desire to become much more autonomous in many, many different areas of industry, the desire to cut back on imports, all of these things, and this emphasis on state-owned enterprises and so on, this tussle with the United States, all of this suggests a desire to be walling China off from the rest of the world, to making it as independent and autonomous as is possible. And in that scenario, I don't see them opening the capital account. Yeah. Well, yeah. My understanding has evolved over time. If you'd asked me this question 12 years ago, sometime in 2005, 2006, I would have said that China is heading towards greater and greater opening. It's growing very rapidly. It wants to, globalization is something that is advantageous for China, and it's pursuing. And I would see more and more reform happening over time. But in the last few years, I don't see that trend, and I see the reformers now having less of a voice than they did in the past. And I have two people both of whom I know quite well, Zhou Xiaochuan and Guo Shouqing, both of whom I worked with earlier on. These were sort of reform-minded people. I see them having less of a voice now in the so the reform momentum, which appeared to be surfacing in the 2000 and soon after WTO and prior to WTO and all those times, I see less evidence of that. Well, let's say that now you've added another wrinkle, which is this COVID shock, and the implications not just for China but for all of its trading partners in the world. So if it leads to more deglobalization, I don't know how China would react. China could begin to sever some of its links with other countries, or it could take a much more proactive role and push globalization, as Mr. Xi Jinping has said at various times, that I'm for globalization because it helps China. So China could be a force for maintaining globalization in the face of this shock, in which case it would have to be proactive with regard to reforms. And those reforms would be to China's benefit, state-owned enterprise reforms, opening up and so forth. But politically, there'd be a cost. And the question is whether we're willing to bear the cost or not. Great. Okay, I'm glad you did. See you. Bye-bye.